Hello and welcome to the walkthrough video for chapter 13, where we get to see 3 problems where we'll be preparing some budgets or either estimating numbers to help us better understand the master budgeting process. So let's start with this first one. We have Emmons Lawn Maintenance, providing lawn and garden care for residential properties. In the current year, ELM maintains 75 properties and earns an average of $5,000 annually for each property. The owner of ELM is planning for the coming year. New building in the area is expected to increase volume by 20%. In addition, the owner estimates that the number of homes that will want ELM services will increase by 10%. ELM plans to increase the price of service by 12.5% to cover expected increased wage and equipment costs. So we have to estimate revenues. So looking at this information, there's a lot of things going on, and this time is one of those rare occasions where we'll need everything that is actually going on. So we know that on an average, ELM maintains the 75 properties and on average earns $5,000 for each property. But here's what's going on. It's not going to remain at 75 properties. So we're going to take that into consideration first. So we have 75 properties, and we are expecting that because of new building, the volume is going to increase by 20%. So we're going to multiply the 75 properties times 1.2. Now, I know we don't expect them to get every single new building as a customer, but we have to take into consideration that increase in volume because ELM believes that they're going to be able to get 10% of that increase. So we then multiply the 75 properties times the 1.2% times 10%. Or 1.1. If I do just 1.1, then I don't have to go back in and add it in later on. Okay, so that's going to give me a better estimate of the number of properties that we'll expect to manage. Now, normally I get $5,000 for each property, but because I'm expecting to have to do a little more work, I have to hire some more people. So before I multiply all this by my $5,000, I want to take into consideration my increase in my revenue of 12.5%. So I'm going to multiply that times 1.125. And then finally, all of that will be multiplied by my $5,000. Equals here, and then I can actually put in the formula, 75 times 1.2 times 10 times 5 times 5,000. Sure, there, right? Let me make this look like a nicer number. And 556,000 and some change is what I expect to see in my revenue. So we're just taking everything into consideration because we're expecting an increase. This is a train of thought or a line of thinking that a cost accountant would have to go through in order to estimate sales or revenues for a period. All right, remember that sales is the starting point for our budgeting process. So it was good to do this one first. Let's see another budget in our budgeting process. And in this Excel file that I have made available for you in Canvas, you can already see that I had some information there for you. And this is the formula for our production budget. So it has everything listed in detail for me. Now, because I want to make sure that you understand the calculations, I ignored the part that you know, meaning you need to have a heading, single and double underlines, all that good stuff. So I omitted the heading because I wanted to jump right into the formula because we're doing a production budget. So let's see, we have Wardle Manufacturing Group estimating that sales for the coming year will be 576,000 units. Company policy is to maintain a finished goods inventory of 1.5 months unit sales. Beginning inventory is 75,000 units. assume sales occur uniformly throughout the year. We need to estimate the production level for the coming year for Wordle to meet these objectives. Let me make this a little bit bigger. Okay, now I can see it. So a production budget begins with expected sales. We add ending, we subtract beginning in terms of inventory, and then that gives us our units that we want to produce. So I know my expected sales of 576. I'm gonna plop that in there. Desired ending, that's not explicitly given to me, so I'm gonna come back to that one because beginning is right there for me. So I like to fill in what I know gives me confidence as I move forward. So I know I subtract beginning inventory. So let me see what they say again about desired ending inventory. So the company's policy is to maintain a finished goods inventory of 1.5 months unit sales. So the first thing I have to consider is how many units do I sell in 1 month? Once I know how many units I sell in 1 month, I'm then going to multiply that times 1.5 because the policy is to have on hand 1.5 months unit sales. I don't know 1 month's unit sales at this point. I only know it for the year. So I'm going to take the 576 and divide it by 12. And then I'm going to multiply that times 1.5 in order to help me find how many units I plan to have on hand at the end of the period. And of course, if I get a number that's greater than 576,000, then I did something. But I don't think I did. Oh, let's see. Oh, I did. I forgot to put the equals. There we go. What did I do wrong? Fix it for me. Okay, okay. All right, let's delete. Let's try again. 576. I probably put in a comma, knowing me. Times or divided by 12. And then I want that times 1.5. There we go. Now, let me go back so that you can have an opportunity to see the formula again. I went through that fairly quickly because I goofed up the first time. I probably put a comma the first time. But no commas. Need to put it in as a formula. Then we add those two numbers together, and that gives me the total amount of units I need. But I already have some in beginning inventory, so I subtract my beginning inventory because I don't need to produce the extra 75. I already have them on hand, so I'm not going to waste money and produce something that I already have on hand. And when I add those two together, that tells me that we need to produce 573,000 units for the period. So on that production budget, and we're going to do another production budget where we get to see it for multiple periods rather than just one period. But just remember, expected sales is your starting point. You add ending inventory, subtract beginning inventory to arrive at the number that you're working towards. Let's see the next one. In the next one, we have Elliott Sprinkler Systems producing equipment for lawn irrigation. One of the parts used in selected Elliott equipment. One of the parts used in some of Elliott's equipment is a specialty nozzle. You would think I don't know how to read. The budgeting team is now determining the purchase requirements and monthly cash disbursements for this part. Elliott, what's throwing me off is Elliott should have 2 L's, not 1, but that's what's throwing me off. Elliott wishes to have in stock enough nozzles to use for the coming month. On August 1st, the company has 16,800 nozzles in stock. And although the latest estimate for August production indicates a requirement for only 15,000 nozzles, total uses of the nozzle are expected to be 14,700 in September and 15,540 in October. They're giving me so much information here. Nozzles are purchased at a wholesale price of $8, and Elliott paid 25% of the purchase price in cash in the month when the parts are delivered. The remaining 75% is paid in the following month, and Elliott purchased 21,000 parts in July. Goodness gracious, that's so much information. Let me see what they're asking me to do. We need to estimate purchases of the nozzles in units for August and September, and estimate the cash disbursements for nozzles in August and September. So, lots of work here. And it looks like this time, instead of doing or following the formula for a production budget, we are actually following, because I need to change that a little bit, we're actually following, change that to unit purchase, we're actually following the formula for a direct materials budget, but it looks the same, because rather than sales being my starting point, expected production needs would be my starting point. But the formula follows the same format in terms of me adding ending, subtracting beginning. And then it looks like they want me to find the cash disbursements. So I got to deal with this a piece at a time. First, I just need to know how many units I need to purchase. Let's deal with that purchases budget. I know I'm looking at nozzles, and on August 1, the company has 16.8 in nozzles in stock. The latest estimation for production indicates a requirement for only 15,000. So the number of nozzles I need is 15,000. We'll do September last. Let's do August first. Take it piece by piece. So for August, my estimated production needs 15,000. Now, on August 1, the company has 16.8 in terms of nozzles in stock. So I know that's my beginning inventory, because it says August 1. So that 16.8 will ultimately be subtracted out. Let me go ahead and put that down there now. Now, my next piece is desired ending inventory. Hopefully they tell me that next. So total usage of the nozzle are expected to be 14,700 in September and 15,540 in October. Okay, so why are they telling me this? Like, I'm looking at this and it doesn't make any sense. I need desired ending inventory, and you are telling me total usage of the nozzle are expected to be 14,700 in September and 15,400 in October. All right, so let me go back and read again, because maybe I'm missing something. You tell me nozzles are purchased, purchase price. All right, let me go back to the first sentence in the paragraph. Elliott wishes to have in stock enough nozzles to use for the coming month. Oh, so that's why they tell me the nozzles that are expected to be used in September are 14,700. That's an indication of what my ending inventory for August needs to be. So that 14,700 is actually my desired ending inventory. And the only way I know this to be true is because of this first sentence. Now, you're probably reading ahead of me. I was still hung up on Elliott only having one L and not two L's. So I read that sentence, but I wasn't paying attention to it, because Elliott wishes to have in stock enough nozzles to use for the coming month. So total usage of the nozzle are expected to be 14,700 in September. That simply means that that is my desired ending inventory for September, for August, excuse me. So we add those two numbers together, and that gives me my total needs for August. I subtract out my beginning that I was pretty confident about of 16,800. And then that's going to give me the units to be purchased. Now let's look at September, because September is a mess. Because for September, let's see, the expected production needs aren't as clear as they are for August. For August, they tell me, boom, 15,000. For September, this is where they start using this weird language where they're saying total uses of the nozzle are expected to be 14,700. Well, that's production. So that's my expected production needs for September. That also happened to be the number that I need to use for ending inventory, but it's my starting point for September. So that 14,700 is used 2 times. It's used as desired ending inventory for August, and it's used as my production needs for September. Now, at this point, because I'm ingrained in this problem and I'm over the fact that Elliot only has 1 L, I understand that desired ending inventory is the production needs for the next period or the next month. Production needs are the same as total uses of the nozzle that we are expecting. This is why they give me total uses of the nozzle for October. October, that's my production needs for October. That's my desired ending inventory for September. So that 15,540 shows up as my desired ending inventory. So I add those together to get my total needs. Let me make this bigger. Okay, that's good. Now for beginning inventory. Well, the ending inventory for one period is the same as the beginning inventory for the next period. So beginning inventory for September was not explicitly given to me because I'm supposed to know that the ending inventory number gets pulled down for the next period. So if we were to have to do October, my beginning inventory would come from ending inventory for September. So we just pull that number down. Now, we didn't have to do that for August. It was given to us. For September, it was not. Let me add in my line here. And then we add these two together. All right, so now I know how many units I actually need to purchase. Now that I know how many units I actually need to purchase, we can take a look at finding our cash disbursements. Now for August, I know I need 12,900 units. I know that each unit costs me $8. The issue is that 25% will be paid for in August. The other 75 will be paid for in September. For September, 25% will be paid for in September, and the other 75 will be paid in October. But I don't have to worry about October. They only asked me for September. Now, August, since this is my first month, I have to take into consideration accounts. I put in here accounts receivable. It's supposed to be accounts payable. I'm all flipped around. It should be accounts payable. And that comes from what I purchased in July. So I purchased 21,000 parts in July. I'm going to pay off a portion of that in August. Now, during the month of July, I paid 25% of these 21,000 parts times $8. In August, I'm going to pay 75% of these 21,000 parts times $8. Because we follow that pay cycle of 25 this month, 75 the next month. So accounts payable is actually July. So we take the 21,000, see if I can remember that this is the formula, and we multiply that times 0.75. And then we multiply it times $8. I wanted to put in a dollar sign, but I won't because I don't need it. And we get 126,000. So again, just to recap, my accounts payable is actually what I owed from back in July. When I ordered this in July, I paid 25% in July, and I'm going to pay 75% in August. Now, let's deal with August, because August, the magic number that I'm looking for is 12,900. Now, July, that 21,000 parts, if I would have done this materials budget for July, that 21,000 would have been here for July. but I didn't. But for August, I did. So I have my 12,900 as my starting point. For that 12,900, I'm going to pay for 25% in August. Can't forget to multiply that times 8. And then I'm going to pay the other 75% in September. So I take that 12,900 times 0.75 times 8. All right. Now I'm going to double check to make sure I didn't miss anything, because I get a total of 103,200 and 12,900 times 8 is 103,200. So I just did that as a little check, just highlighted those, came down here and saw that I got a sum of 103,200, and I should, because we're paying off the whole thing. 25% gets paid in August and the other 75 in September. Now let's do September. September's gonna be a little bit shorter because I don't have to do as much work because I'm only dealing with the 25% that I need to pay. So I'm gonna take that 15,540 and multiply that times 25% and multiply that times $8. And there I am wanting to put in a dollar sign. So now I can add down, and in terms of how much I expect to pay out for August, it's 151.8, and for September, it's 108,480. All right, go ahead and give these problems a try in Connect. These are similar to the ones that you find in Connect. And once you're done with that, you can check out the video, the next video for chapter 14. I appreciate your time and attention. I hope you have a wonderful day. Reach out if you have questions.